Happy New Year, everybody. It is Wednesday, January 8th, and this is our first live event of the year. We hope that the new year has treated you well. Hello, Harry. How are you doing?
I am good. I'm good. Trying to stay safe from these crazy fires here. They're about 20 minutes south of me, but no evacuation order yet, and the winds look like they're dying down. So hopefully, all be well. But if I top out of here, it's because I probably lost power, which if it was going to happen, should have happened last night, but I don't think it will. But we'll see.
Yep, completely understandable. So we haven't had any real picks to speak of. So, uh, oops, sorry. I think my audio might have just dropped out.
I can hear you.
All right. Well, let's start the new year off with a little technical difficulty. And I'll get my screen right back up.
While you do that, by the way, someone asked about the interview that we had with the trader. There was a lot of technical issues with that interview. We're not sure if we're going to redo that one, but we are going to do a series of different interviews. There's several different traders that we're looking at to do interviews with. So this year we should be putting up a lot of interviews. Matt asked that question.
Yes, and it's also very difficult. As soon as to have two people on a live stream is very difficult, and to have three complicates everything exponentially. So, and we're even having problems now. So, I think probably our best method going forward is going to be to have Harry do an interview or to have me do an interview, and not to try and have three of us. It's just too complicated, at least given what we've got currently as far as the methodology for us doing these. So, still trying to get my screen to appear, and hopefully it's going to show up now.
Yeah, I see that little thing there.
Yes. Closing that down, and yeah, I'm closing everything down here. All right. We will see if that helps here.
Worst case scenario, just let me know and I'll share mine and you can work off that.
All right, we're going to give this one more shot here, and I think this one might have a chance.
There it is. I see it on
Hopefully.
the.
All
Okay.
right, great.
All
All
right.
right, well, we haven't had really any picks. The most recent one was Spot by Harry, and it was way back in here, and
12-18.
on this long red candle. It was a nice trade. It went down and it tested the 50-day moving average, which I'm going to answer a question real quick because it came up on this. So that was a winning trade. It was a nice trade. And the question that I got right out of the gate was, hey, if I have my stop at a moving average and near the close, it keeps waffling back and forth above and below that moving average, what should I do? Well, Spot's kind of a good example because it's right on that 50-day moving average and it's been above and below it. Whenever you have a strong stock, ideally, you're not buying right at the moving average, because if you are, then you're going to be all over the place with it. You want to see the moving averages act like a safety net when the market comes down and it tests that safety net. You want it to bounce. You want it to bounce violently, like it got jabbed in the ass with a cow prod, okay? Because that is buyers saying, I love it here. I can't get enough of it here. Give me more. And they shoot the stock higher. When you've got a stock that's waffling around that moving average and it's not jumping off of it, then you don't want to take the position there. Ultimately, though, you want that support to show some excitement on the part of buyers. If you're not seeing it, it's not a good entry point. It's not a good place to enter that trade. If
Yeah, I
you're
mean, I think I'm
wait
writing an article on this right now on the SMA bounces, and spot is a great example where, in this case, if you were short spot, which was the trade, you'd see it come down to that SMA. Now, what you'd be looking for there is great. If it closes below the SMA, you keep the short on, right? Because now your support is all the way down at the 100 SMA. And if the next day it bounces up, you get out if it crosses the SMA to the upside. If it doesn't close below the SMA, you close the trade, right? Because that means that support's holding. It's going to bounce, and that's exactly what spot does here. It comes down, it tests it around 445, and then it bounces back up. So, you're short, you wait, it goes down, it tests the SMA, you wait to see is it going to close below it. It doesn't, you close the trade. It does, you hold on to it and ride it down short. So, you just got to look and see what are investors doing, what are institutions doing around that SMA. And it was clear here on spot, there was no desire to break through, just to test it. It tested it. It did not close below it.
I had actually, I'll review my picks from Sunday, and this is another good example. CVNA. I like this short. Okay, so I'm short in here, and now CVNA is waffling around the 100-day moving average. What do I do? Well, I'm not going to focus on the 100-day moving average. What I'm going to focus on is this, and this. I'm focusing on the fact that there are sellers knocking this stock down, and they're doing so in a very aggressive fashion. And I know that from the long red candles. This is not a wimpy little drip, 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 weak move lower. This thing is crashing down. Okay, so what was the news? Do I need to worry about this? It was a brokerage upgrade. So what? Some analyst out there thinks Carvana is a good buy here. So I've got to I have to weather that storm, and I want to see that 100-day moving average preserved. And guess what? It has been. Did it poke above it? Yeah. Am I going to worry about it? No. I'm going to make sure that the stock is holding that resistance level and it can move through it. I'm not worried about it. So if you've got a position on and you have nice, strong moves that you're leaning on, then watch what it does around there, but you don't have to panic out of the position. Let's say that it starts moving higher and it finds support here. Now, I don't want it spending a week around that level because I want to see sellers say, hey, I liked it short here and I liked it short here. I like it short even more here. I think I'm going to add some more shorts. And so the stock won't spend a lot of time there and it'll roll over and start doing what you thought it was going to do in the first place.
So, good question here on the market before we get to individual stocks. Someone says, Harry, when you say the November 5th, 6th election gap is held, what's your criteria? Since we closed inside it twice, December 19th, January 2nd, do you adjust the gap after breaches? Thanks, stay safe from fires. Now, just like you don't adjust this SMA after a breach, what you're looking for here, you have this huge jump up. So Trump wins the election on November 5th, and then on November 6th, you get this jump up from a close of 576 on the November 5th to all the way up to a close of 591 on the next day. The gap is at 585, right? So that was the gap up. So we opened that day at 585.39. So you have this huge gap between 585.39 and 576.74, almost a $10 SPY gap. And that's where we gapped up around $9, $10 that day. And you'll see, during the next following month or two, you have several times where the gap is tested, right? So it's obviously been tested on November 15th, on the 18th, on the 19th. It was tested again even on the 20th, and then all the way into December, the 18th of December, the 19th, 20th. It seems like those dates are funny. And it breaks it on the 20th, like really breaks through where we go down to 580. Then again, that same gap is tested on 12/30, New Year's Eve, 12/31. and then on January 2nd, where it breaks it again, and it goes down to 580 again. What that is, that those are just tests into the gap, and then it's holding and it's bouncing back up. So that gap is still there, right? What you're looking for are these closes, and it only closed one time in the gap, really, and that was on 1220. But then the next day, you did not get confirmation. You did not get a continuation. It gapped way back up again. So on 1220, we close at 580.91, and then 1223 on the Monday following that Friday, we open at 587.66, right? So we open up $7 or $6, somewhere around there as a gap up, and go through the 50 SMA. What you're looking for is a close in the gap, and then the next day you see continuation. That means that gap is starting to be filled, and then you can talk about you're getting all the way back down to 570, 570.52 is the bottom of it. But you also have the SMA 100 sitting there at 580.28, so that would be the next stop point. There are a lot of levels of support once you get into that gap and you start to fill it. So that, you don't go, oh, okay, it breached the gap. Now I'm going to reset the gap at the new breach level. Did it confirm that breach? If it didn't, that gap still holds. Then you wait to see. Are we going to test it again? I don't know. It looks like we might. The market certainly has been showing a lot of weakness lately, but we'll see.
Yeah, so I'll get into my market analysis. From my year-end forecast, I've been looking for the market to show some signs of weakness as we get into the new year. If you haven't watched that video, you should, because I get into great detail on why I feel that way. It's very much dependent on the price action that I've seen into year-end. There are also some fundamental issues that I'm keeping an eye on. Let's keep it straight to technicals right now. If I take a look at the market right here, where we got out of our bullish swings, said we don't have very much upside. We got a lot of downside here. Let's take gains. Sluggish price action into year end is typically not a good sign for the new year. We want to see that nice strong year end rally. Didn't get it. In fact, we got this nice long red candle after the Fed. So, okay, well, was this a one-off? No. You are not going to get a long red candle like that when it's just some kind of casual selling. Oh, maybe some sell stops were triggered, or maybe there was some kind of program that, no. I mean, that could have been part of the contribution to the length of this move at the very tail end when it got through the 50-day, but no, this is legitimate selling, and it's been confirmed. So, okay, now we get this nice big bounce, but we don't get anywhere near the open of that long red candle. All right, well, now we get this next little wave of selling. Look at the chart. Do you see how much time we are spending below the 50-day moving average? Yeah, so what? I mean, maybe we're just going to start creeping higher and we'll work off this selling pressure and we'll make a run at the all-time high. Sure, that's possible, but here's the difference. Here's the tell. This is the stuff you need to pick up on. Remember how I told you earlier, when the market tests the safety net, you want to cow prod in the butt, whoosh, off to the races, because buyers see this as an opportunity. Same thing here. Look at that. We get a little dip, lasts about a week. Whoosh, higher. All right, that tells us buyers are in control. When you start spending more time down on those moving averages and below them, that is a sign that sellers are keeping a lid on the market. They are absorbing all of the buy orders that are coming in. Buyers are not in control any longer, and they are not that interested. You're going to challenge the 100-day moving average. That's the next move, in my opinion. And I believe when we crack it, we're going to crack down below it substantially. Then we have to watch to see how tall the bounce is after that. Does it get back to the 100-day moving average like that? Okay, good. That's what we would want to see as bulls. Does it get through the 50-day moving average with ease, or does it stall short of it? Well, if we get this nice long dip, that's going to be a sign that sellers are aggressive, buyers are passive on a wimpy, weak bounce that can't get through these levels with ease. That tells us that a very good longer term short is setting up, one that will at minimum test the 200-day moving average. That's my game plan. And we got big news coming out Friday. Got the FOMC minutes this afternoon. Not
Yep.
looking for a big move off of those. We've had some economic data points this week. They've been generally good. ISM services, important number, a little bit better than expected. 54, solid expansion area. So nothing to worry about there. ADP was a little bit light this morning. The one thing to keep in mind is that the unemployment report is filled with seasonal adjustments, which in my opinion makes it misleading. It's kind of a junky number. And the other thing that I would not be surprised to see is a revision to the recent jobs numbers showing higher rates of unemployment. And this might sound like a conspiracy theory, but I've seen it, and the BLS has actually confirmed this. And during President Obama's reelection, amazingly, the unemployment rate came in below 7%. Amazingly. And so, about 6 months later, news is swept under the carpet. Yes, it appears that those numbers were fabricated and that actually the unemployment rate was much higher than that. Well, it wouldn't surprise me if these numbers aren't painting a clear picture of what's really happening in the employment scene. And there have been many, many more continuing jobless claims. So if you don't look for a job, and excuse me, if you've been looking for a job for 6 months, you can't find one, you're removed from the labor force. That's been going on for decades, so that's nothing new. But we're starting to see those continuing claims rise. So I see some fundamental problems here. So I'll let Harry kind of weigh in on what's going on, and we'll answer some questions.
I mean, one concerning number for me was the credit default swaps that were going off on the U.S. debt. You know, that's usually an insurance, right? It's an insurance against a default, and it's generally burnt money because the U.S. just doesn't default on its debt, right? These things are only going to pay off if the U.S. defaults on its debt. You doesn't make the payments on time, whatever, so on. It just doesn't happen. You know, and then you look back in 2008, right? Everyone remembers the movie Margin Call, if you want it simplified for you, but where Michael Burry's out there and he's buying up all these credit default swaps and basically banking on something that never happened before, which is all these defaults on mortgages. Well, it seems that the number of institutions and investors pouring money into these CDSs, these credit default swaps, for the U.S. to default on its debt has started to go up dramatically. Now, it hasn't gone up to a red flag warning level like the housing one did in 2008, but they are going up in a significant fashion. Which just shows, again, it's the same idea as why is the bond market going up while rates are being cut. There is this fear, this uncertainty that inflation is going to rear its head again, right? And if it does, the Fed will quickly reverse and return to a much more restrictive stance. That the debt is not going to go down. That you know, there's a lot of uncertainty abound, and when you have this uncertainty, what people tend to do is they tend to want to hedge, right? No one's pulling a tremendous amount of money. There is money being pulled out of the market. You see the selling, but you don't have, you know, the market's still pretty closer to an all-time high than it is anything else. What's going on though is you're seeing this increase in hedging, and so there is some fear out there. You have fear. You got a market that's entering into an election gap. You have the 100 SMA there. So yeah, I mean, these numbers that are going to come out Friday, the unemployment, it just takes one really bad number to turn that fear into sort of selling panic. And if we see that, then we get that drop, which is why when we talk about buying the dip and all that, you have to make sure that the dip isn't done dipping, right? And that always means the second mouse gets the cheese here, where you see, and this goes to a question that someone asked on IONQ on my thing here, saying, is this a good time to buy? Well, look, you have Jensen coming out saying, hey, quantum computing is at least 10 years away. And then he jokes, maybe it's 30 years away, right? And all of these companies, IONQ, QUBT, which is absurd. This company doesn't even have a quantum chip. You look up their address in their offices, they don't even have a loading dock. They don't even have a warehouse. They don't have anything. Um, just a couple of offices there. But these quantum stocks were based, they're generally cheap, they're under $30. And here's where you can take sort of the institutional out of it, and you get a lot of retail traders pouring into these QBTs, these IONQs, RTGI, all these stocks. And then you get Jensen kind of pulling the rug out, saying, well, you're not going to see any real revenue from this thing for a long time, a decade at least. And these stocks getting hit. Do they have real numbers to back them up? Fundamentals? Who knows? All I know is look at the price action. You see they're dropping. You need to wait to see technical confirmation. The drop is over. IONQ, that would be the 50 SMA it broke through. Can it recover and reclaim that? If it does, then you can buy that dip somewhere at around, $32, $33. You don't buy it now while it's still dropping. You wait to see. For all you know, these things will go to zero. So you wait.
Yeah, that's a good point because I had a stock that I highlighted on the long side, LUNR, on Sunday in the Sunday video. And so I'm going to go into the 5-minute chart here and we'll be able to take a look at where that was on Sunday. I'm going to take these signals off here so we can see it better. And so this was the price action that we had Friday. So in my Sunday video, I said, I'm going to put an alert line right here, and I'm going to put an alert line right here. I like the D1 chart, but I want to try and buy a pullback on this stock because it is choppy. There is no reason for me to rush in and buy this right now. The market's not going anywhere. So didn't get the alert on Monday, but I did get the alert on Tuesday. So I got the first alert. Did I act on it? No. Got the second alert. Did I act on it? No. Why not? Because the market was doing this. Why in the hell would I take a long position when I've got the market in a gap reversal down? Why would I take a long position when the market's just blown through the 50-day moving average and AVWAP-Q? I wouldn't. There's no reason for me to take that trade. So what do? Come in, I take a look at those price levels, I take a look at the drop in the stock, and I go, okay, well, the stock is still interesting to me on a D1 basis. I don't have to trade it. Click GTC, click on some areas that you would like to see the stock get through. Now that the stock has been pulling back, and if I still like it on a D1 basis, I'm going to set some GTC alerts. And if the stock rebounds and starts moving higher, then I'll get those alerts and I'll have an opportunity to buy it at a good price. That's the beauty of setting alerts.
I'd like to do a quick plug for our for your chat room. We started the year breaking records on the number of people in there, and so I'm glad to see a lot of people coming in. This would be Pete's OneOption chat room. I do moderate that room. I have a lot of fun doing it. It's great seeing people learning there and being able to interact one-on-one, but it's part of the OneOption universe. So I'm glad to see so many people in there joining. The number we broke a record on Monday, and then now we just broke another one today. And this is, we're talking about this room's been up and running for over 10 years. So congratulations to Pete and to everyone there that the room. I love being in that room and moderating it, and it's great to see the numbers.
Hey, you make the room great. Dave makes the room great. All the up and coming traders that we have now make the room great. And the
Yep.
beauty of it is, I've been busy writing. I mean, I give my market analysis and I provide commentary through the course of the day on what I see happening in the overall market. But it's the traders, it's the people who have learned how to trade who are posting trades in the chat room. So it's really feeding on itself. And when people take trials, they come in and they see that this is not just one guy spewing out picks. This is a collection of people. This is a community who are embracing a system, who are finding stock trades that follow the system, and they're posting them so that when you see a symbol and you see somebody entering a trade, you bring up the chart and you go, I get it. I know exactly why they're taking that position. So it's pretty cool. Been building
Yep.
it for a long time.
I got to give props here to Tassel. Great call out, great information. DG short, exclamation point. We just broke out of a 4-month consolidation at the relative lows below all major SMAs. Breakdown on a market up day. All aboard the slow bleed to 66. PS stay safe. Thank you on the stay safe. But absolutely, looking at this daily chart, this is what you want to see. You get this huge gap down on Dollar General on 829, right? I believe that was probably, I have to believe that was an earnings gap down. And then you get this long consolidation, which has a drift down. It stays under the 50 SMA, but if you draw those lines, you draw the channel, you'll see that it's consolidation with a slight downward tilt. And then today you get this finally this break below that ascending trend line on the lower end of that channel, and it goes down to 70. This is exactly the price action you want to see. This is what you're looking for. Excellent call out, excellent way you phrased it and pointed out all the technicals. This is a good short. Thank you, Dollar General.
Yep. And another key component, look at the volume. Hello. This is not mom and pop out there. The institutions are selling this stock.
Yep, they're out of Dollar General. So good short. And we also, my opinion on MSTR, APP, and GEV. MSTR, my opinion is stay the hell away from it. You look at the chart, it is a technical short right now, right? You have the stock, it's gotten its ass kicked since November 21st when it was up at like 543, right? So this thing has lost close to 40% of its value in 2.5 months. Technically, you get this break below the 50, you get this test of the 50 SMA, which lasted from 1219 to 1227. Then towards the end of the year, you get the break below it, but then it bounces back above, and then today it breaks below it again. The problem, of course, is that this is not a purely technical stock. It is a stock that is in large part tied to the price of Bitcoin. If you just, all you have to do is on your chart, just map, just like you would map SPY against it, you just map Bitcoin against it. Now, you map SPY against it and you see this thing's not very correlated to SPY. So this is not a good relative strength, relative weakness stock to look at. There's very little SPY correlation. There is a Bitcoin correlation, but it's also not terribly strong. This thing's kind of off in its own universe. So even though you have a technical short on this, it is, you know, maybe you could day trade it, right? As long as it's below VWAP, it's dropping, it's breaking the low of the day today. Yeah, you can day trade this short and then keep it very tight. But other than that, I would not be playing around with it. App, yes, app looks like it's dropping, but you have the 50 SMA right there. Wait to see if that's going to be tested and if it's going to bounce. If it bounces, you might have a good long on app. Right now, I wouldn't short it as it's so close to the 50. And then GEV, another stock. It's a utility. I fucking hate utilities. But GEV, I mean, it's got a bearish trend in the last 3 days, but still a bullish chart. I wouldn't touch GEV, and I just don't like touching utility stocks. But that's just me.
Got a nice little market sell-off right now. You can see nice stack candles with
Here comes that gap.
volume. There's the gap. Yes, what I
585.39. We are approaching.
So what do we do with a move like this lower? Well, first of all, you had this heavy selling yesterday on what? On heavy volume. Okay. Nasty D1 chart. So there's your move yesterday through a VWAP Q, through the 50-day moving average. All right. We know there are sellers. So this morning you get this wimpy. What is a wimpy bounce anyway? Mixed overlapping candles, green and red, up and down and up and down. Yes, it's moving a little bit higher, but constant retracement. Best thing you can do is learn how to read price action. Take all the indicators you've got and throw them out the window. Learn how to read price action. It is current. You're going to be in moves up in here instead of waiting for confirmation from your technical indicators because you understand how to read price action. This was not the key to the move. This was the key to the move. And so for any indicator, it's going to be saying, this is a bullish move. This looks wonderful. It's not wonderful. It's crap, especially when you take this into context. Okay. So up in here, you're waiting, you're watching for signs of weakness because this is a weak move, that's a strong move, and then you get a long red candle that takes out the open of this green candle right here. Bingo, shorting time, follow through VWAP, short some more. If we get through the low of the day easily, short some more. That's how you do it. You don't get that from an indicator. You get that from understanding how to read price action. Would I short or add now? This is a pre-FOMC minute day. Light volume. No, I wouldn't. I would have been taking profits in here near the
Look at
low of the
that
day.
bounce,
And I would have
Pete. Look at the
would have
bounce
been
right
keeping.
off the election gap. Look at it. 530, 585.35,
Yep.
bouncing right off of it right now.
And let's go back and look at that. So right in here, you've got right in that support right in there as well. So, I mean, no, you have to know what's coming up. You got news coming up right now. Look at what traders are thinking. And before the open, I'd noticed a lot of pre-open activity in the market. So my early morning comments were, look for some volatility today and some price movement. It's unusual to get two big back-to-back days. So today is likely to be very choppy. And we've got a massive news event Friday morning, the jobs report. Tomorrow is a legal holiday, so there won't be, the market will be closed tomorrow. So what are traders going to do ahead of major news? Not a whole lot. Okay. You're going to get this type of choppy price action. So we did get some nice volume here. So anytime you see volume, got to pay attention to what the price action was doing. And in this case, it suggests again that sellers are the ones that are active. I'm going to show you my short. My trade for the day is AFRM, and that breakdown I really like. You can see how the stock has been crowning, okay? Lower highs, lower lows, breaking through technical support levels. It's got some relative weakness here. I'd like to see a little bit better volume, but it's got a little bit of volume. And this is actually a short that I showed in the chat room here. Now we're starting to get nice follow through. That is your short pick. I like it on a swing basis too, and you would use that 50-day moving average, and I would probably use even that AVWAP-E as my stop out point, but give it some room. You're up at near the high end of the range, and you want to see it continue to drift lower down to that 100-day moving average.
Someone wrote, first, you know what? I'm going to give my pick right here first, and then we'll go from there. My pick right now is an Adobe short. That I'd be very careful with this one because it could bounce from here, but it did break below all the technical lows, all the every single indicator you'd want. This is a very weak stock. The question is how much of this move has already played out. So Adobe short for the moment. I may change that before the end, but keep an eye on it. I called that out 2 days ago. If you would have taken it 2 days ago, you would have done very well with the Adobe short. I still like Adobe short. So someone asked, and I'm skipping over some of these questions just to hop into this one. Why is SoFi crashing? I really, really got to question your definition of crashing here. SoFi is down 55 cents today.
Okay.
Breaking below the 50 SMA. This is not a crash, really. Why is SoFi down 55%? I don't know. I'll get all the teams on it to figure out what's going on and why this thing has dropped 3% today. I have no idea why SoFi is down 55%. Maybe because the market itself is down $2.76. So, maybe because if I look at the financial sector is down 0.5% today. Million different reasons. Chances are market's down, SoFi's down, and it's down 55 cents. So crashing, one thing just to help all of you and help us and help the whole fintech community, only use superlatives when they actually would apply. You don't say crashing unless something is down like 30%. You don't say, why something's surging unless it really is surging. Words mean something. They matter, and they matter to perception. So when you think about crashing and you say, oh, SoFi's crashing, you immediately think, oh, this is a good short. It's not a good short. It just barely broke the 50 SMA, which it did on 1.2, which it did on 1.3. And both times it popped back after 1.3, it popped back up. Will it pop back up again? I don't know. If it closes below it and opens below the 50 SMA on, not tomorrow, it's closed, but Friday, yeah, maybe then it's a decent short. Doesn't really have the ATR to do much with it, but sure. Otherwise, you sound like someone who owns the stock and you're kind of really scared that it's going down.
Bingo. Nailed it. That's exactly when I hear somebody say something's crashing and I bring up the chart, I'm like, they're long and they're stuck. Look at this stock scream. And you bring it up and it's like, what? It's not even through the prior day's high. What are you talking about? They're long. So I've given you this lesson many times. Maybe you haven't been in the live events, but please be in these live events because you're going to get lots of lessons and you're asking questions that you're asking questions and other people probably have them as well. When you get a long red bar like this, this is a massive bearish engulfing candle. 1, 2, 3, 4, 5, 6 days engulfed in one day. That tells you get the hell out of the way. Exit, okay? Especially when you get a nice big move like this. It went from $8 to $16. What in the F more do you want from the stock? It went up 100%, okay? Do you think some people might want to lock in profits that bought it down at the $8 level? That is your sign. So you should never be puzzled that, why is it down so much? Oh my God. You get this little bounce here. Wham, wham, wham. These sellers are still back at it, okay? They're still happy to sell more stock. So when you get a parabolic move, you see that long red bearish engulfing candle. You don't learn anything else from me. That is where you take gains. And all in here, I am riding, I'm adding, I'm adding, I'm adding, I'm adding. Here when it's in a sideways fashion, I'm not going to be adding. I'm going to be watching, and then wham, I get the red candle. Time to take profits. Another example, MSTR. Blam! Oh shit. But that's okay because I bought it down in here and I added. So my average cost is way down here. That's what I was waiting for. I got my sign. See you later. I'm out. That's how you handle it. And you get these long candles like this after a big move like that. You get these long red bearish engulfing candles. You are going to see profit taking after that. The next move is lower. Do you short it? Do you want to short something like that? You can try, but it's risky business. I would only advocate that for pros. If by some miracle, boom, 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 in 2-3 days, you get back above the open of that long red candle and start climbing, you continuously take a very small long, only a small long, and then it would have to continue for you to add back into that position. But it's very, very rare to see that happen. Warning sign.
I'm going to change my trade. I still like the Adobe short, but to me a better trade here and more room is a short on AMD. We just had a pretty big CES event, so if there was going to ever be a chance for AMD to bounce, that would be it. You see AMD has been leaking lower ever since 10:30, which I believe was in earnings. Continues to drop, stay below the SMAs. You get this 100 crossing below the 200. That is never a good sign. The 50 crossing below the 100. And then you have another gap down. Then you have this consolidation, and now today it's getting pretty beaten up. I like the AMD short here at 120. I believe if it can break below 117, 118, you get a nice, you have kind of free fall drop there with very little support below 118. So I would watch the 118 level, but I really like the AMD short, and that should, by the way, Glory Gaming, answer your questions on my thoughts for AMD. And then the opposite thought, which was NVIDIA. Look, NVIDIA, you look at it, it broke below the 50. Obviously, it was all the way up at 153 just yesterday, right? And so this thing has dropped from 153 to 139 in 24 hours after some pretty positive CES announcements. However, learn the idea of priced in. People in NVIDIA, and I'm not talking about your friend or someone who put some money into it. Institutions in NVIDIA, the CES announcements were not a surprise. They have that information. They do their research. They know what's coming out. They're buying into the event. When the event happens, then you get the sell-off because this is not news for them. The news happened for them. They figured it out way back, in early December, and before that, in early September, where they started buying the stock. Now that it's hit, boom, now you get this kind of sell-off. You break through the 50 SMA today. So one, is it going to close above 139.94? So will it close above 140? That's your first indication on it. Second, draw a line from the bottom of 1217. You connect it to the bottom of 1230, again 1231, again 12, and you see it hits exactly the bottom of today, which is 137.56. So that's your other line in the sand. It breaks below 137.56. NVIDIA might be a good short. It bounces up above the 50 SMA. You wait until Friday, see if it's green again. Might be a good SMA bounce long. Right now, it is a wait and see. Set your alerts.
So I've already told you about long red candles off of a relative high. When you get those long red candles, they are a sign of steady, heavy profit taking. Look at the volume. If you don't believe me, which you shouldn't, you would go, I wonder if I can find another example like that. Then you come back and you go, long red candle off of a relative high. Maybe there's something to this. Long red candle off of a relative high. Long red candle off of a relative high. Maybe this guy's not full of crap after all. Maybe he's actually right. Maybe that is something I should watch for. Long red candle off of a relative high. The next move in NVIDIA is down. It could be my short. I'm that convinced. So you have to have that type of conviction when you trade. Otherwise, you're going to be willy nilly in and out of positions all the time. Is NVIDIA the best short that I can find right now? No. It's in this horizontal trading range. Why would I want to do that? You know, I would rather have something like that's been moving higher that gives me that candle with nice steady follow through a major moving average. But yeah, this is a good tell that the next move lower, how much lower will it go? It could probably find support at maybe the 100-day moving average. Maybe it tests this horizontal support. Go back and look at how far these drops are and what you might possibly expect. So there's another one right in there. You can see once that's in, you don't move any higher and the stock has selling pressure. Big tell.
Pico Suleiman, hello and happy new year. Started the wiki December 3rd, read and re-summarized it 10 times, now learning options, meanwhile tracking the market first, but I need confirmation of my theories and tools. I want to join OneOption to see the pre-market comments, to learn. I'm still in learning theory phase and we'll start to trade in 2 to 3 weeks. You should be trading your paper account, by the way. If you've read the wiki, you know that that's the first step. You should not be trading your actual money first. Which option is best to buy to learn market first? Well, I suggest you do. I think Pete has a 2-week free trial. Join the free trial. You'll get access to the chat room. You'll be able to see the pre-market comments, and then you can decide from there what's best to do. Talk to other members and so on. It's a very active chat room, particularly after hours, where you can talk to other members freely. During market hours, we keep it very focused, laser focused on the market, but you can talk to others as well there. But the 2-week free trial is what I recommend. Are there times where you and Pete differ in your view of the market? Imagine never, not, mostly trying to confirm my own educative experience. I'd say about 10% of the time, maybe Pete and I differ on our view of the market. Generally, never long term. We have the same view. Maybe once a year, Pete and I might diverge a bit on a longer term view, but technicals are technicals. We both see the same technicals. We both see the same, or both pay attention to the same ideas and same things. But Pete probably relies more solely on price action. I rely a bit on macroeconomic, but Pete also relies on things like China and others. So we have a little different things that we stress. But overall, I'd say we net out, but 10% of the time, maybe. What do you think, Pete?
I think that's about right. And it's oftentimes, well, I'm mildly bullish. Well, I'm mildly bearish. Okay, well, that means that we really don't have an opinion,
Just average us out.
we're just trying to get a feel for where the market is going. But yeah, when we're firm one way or the other, then we're almost always in unison. And
Yeah.
that's like Harry said, it's because we're seeing the same types of things. We're seeing the same type of price action. So, but it's okay to have diverging thoughts too, because then you kind of see different perspectives. So we're not trying to march in lockstep. And there have been times when Harry's been super bearish and I have not been as bearish. So I kind of lay back and let him take the reins and vice versa.
We get a lot of questions, Pete, about, and I see this a lot too, particularly on Reddit, and a lot of people struggle with the idea of confirmation, right? So, I have someone here asking about they struggle between a pullback and confirmation of a pullback. Someone else is asking about a Pan W short. If you look at it, it's a perfect example of this idea, because Pan W certainly looks like a great short. It's down $7 today. You look at the daily chart, it's broken through. Since it's 2-to-1 stock split, it's broken through the 50, the 100. Today it breaks through the 200, but it just broke through the 200 SMA, which is the strongest SMA of the SMAs. Confirmation is, to me, and Pete might have a different idea on it, to me it's a continuum, right? There are people that are very conservative on it, where they need strong confirmation. So what would strong confirmation on PanW be? It closes below the 200 SMA today. It opens below today's low on Friday. And then it looks relatively weak on Friday and continues a downward trend. Then you enter the short. Others, a little bit more liberal. They just need to see it close below the 200 SMA today. They go in and they're going to short it towards the close. But, so everyone has a little bit wiggle room on what defines. There's no absolute definition of, oh, confirmed, check, and go. But it's sort of, you want to see closes below major support and resistance levels. You want to see continuation of a trend the next day. And you have to be able to accept, yeah, I'm going to miss some of that move. I might even miss a large part of that move, right? I might miss most of the short on PanW, but I'll get the breadcrumbs at the end. And then day trading and swing trading, a lot of it is about adding up those breadcrumbs to a nice meal.
So I'll do a PNW quick analysis here. First of all, I don't like all this choppy BS in here, back and forth and long tails and green bodies and all sorts of mixed garbage. Not a favorite, but let's look at price confirmation very quickly. Long red candle off of a relative high through horizontal support. You've got my attention. I'm not trading you, but I am definitely watching you now. Heavy volume. Okay, the next day, stock gaps up and closes on the low. How do I know this stock gapped up? Because that's what a red candle tells you. You closed here. That was the open. It gapped up. Did they embrace that gap? Hell no. These sellers came in and hammered the living daylights out of it again. Oh, now I'm a little more interested in that short because it could not bounce after a nasty day like that. And it stayed below the 50-day moving average. So I'm still kind of watching, but I'm interested. This candle here, this is a long doji. Do you see the wick on that baby? It tried to rally all the way back up again. And what happened? They tested that level again, smashed it. Now it actually closed. It made a lower close. Now I'm interested in shorting. I'll put a short position on. Now I want to see the close of these two long red candles preserved. Did we get above it? No. Confirmation. Did we get above it? No. Confirmation. Okay, looks like we might get another leg lower. Now we start to see some selling and we take out this low. I have confirmation, but I've got the 100-day moving average. As a short up here, what do I want to see happen here? I want to see it below through that level. Can't do it on the first effort. That's okay. Closes below the 100-day. All right, still not going in. Can't get above it. All right, I got confirmation here. I can add to the short position here. That's confirmation, in my opinion. It's always relative to what's been happening in the previous bars and how it responds to those safety nets along the way. And if I'm getting confirmation that buyers are not coming in and supporting this baby, then I've got what I need. Do I short right here? Heck no, I don't short right here. Do I take gains on my shorts up here? I wouldn't. I'm just going to watch it because I want this to happen right here. And if I start to see it, put in a couple of nice green candles, then I'll probably start taking profits on my shorts with the notion that that 200-day moving average is going to hold. But this is on heavy volume, so this is a pretty nice little drop in here.
WNB, I notice I am currently looking at very micro level M5 price action, for example, volume, wicks, etc. I understand a good day trader is also a good swing trader. What that should mean for you, though, is never, ever, 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 ever take a trade, day trade, swing trade, any trade, without looking at the daily chart. I look at the daily chart first before I look at the M5. Before I look at anything else, I look at the daily chart. How close are those levels of support and resistance on the daily chart? If I took this trade, how much leeway would I have to hold this position if it dropped because the support is now $10 below where I'm entering? Daily chart all day long. That should be your first go-to. Then you look over at the intraday chart, right? At the M5. I like, and we say a lot of mine and Pete's picks become swings. Yeah, we're giving you swing trades right here, right? Where the picks, when I'm picking AMD short and Pete's picking a firm short, we're giving you swing trades. Obviously, we're mostly halfway through the day. You could do it as a day trade. If you hit a nice profit on it and AMD drops another $2 or AFM drops another buck and you want to take profit on a day trade, great. Particularly you have an off day tomorrow, you have to swing it into Friday. You don't know if the market, certainly one of my concerns on a short right now, even though I'm bearish, is the election gap is still holding. I know I keep saying it, but it's holding. It hit it again today and it held. Now, if we close below that gap number today, I'm feeling a lot more confident in my shorts and a lot more confident on swinging them. So a lot of it, we give these picks, but it doesn't mean take the pick and then just blindly wait. You need to constantly monitor it. You need to monitor the market. You need to see what the stock's doing. You need to see what's happening with the price action, because a lot of the times our picks, 95% of the time, if you go back the last 2 years, will make you profit if you know when to exit, if you follow the price action correctly. So I like swings more than day trade, which is weird that my moniker here is real day trading. It should be just real trading, I think. If I could change it, I would, but it's already kind of branded. But yeah.
Well, in swing trading, you make a lot more money too, because then you have follow through and you don't have to be in and out of the position. But absolutely, swing trades, you start everything with a longer term chart and then you start drilling down. You've got to get what the current context is of the current day. So someone asked me about ON. First of all, I hate this kind of noise. Yes, the stock cracked down today. Okay, this is a nice move, no question about it. And the selling pressure has been very steady, beautiful, nice, tight, orderly, heavy volume. Yeah, I like this short. It's going to continue to go lower, but I hate that D1 chart. So get familiar with what the news is today because it's big. All right, this is a unusual move, directional move for a very noisy, choppy stock. So anywhere else on this chart, I would not be interested. Maybe on this breakdown right in here, I could see getting short there on that little gap down. So that was probably the only other move I see on that chart that I would have even taken.
Do measured moves work on an M5 if we have a trend day? Not nearly as well as they do on a daily chart. I mean, think about it. You get your biggest move a lot of the times on the, it's going to gap up or gap down on a stock, right? Then the question is does it have relative strength or relative weakness? Is it just going with the market? If it's going with the market, you can throw the idea of measured moves out the window, right? Because there is no $5 measured move here, and is that going to be repeatable? It is just going with the market. If you have something that's relatively weak with the market, for example, now you have institutions in there selling it, and you might see those measured moves, but you're most likely looking at them on a daily chart. You're not looking at them on an M5 chart, which is just going to be, you're going to get VWAP test, you're going to get moved around. You really need to see a stock that opens in one direction, continues in that direction, that the trend day is not only with the market, but with the stock itself and the sector. And even then, you're probably running into support and resistance levels on the daily chart. Measured moves matter a lot more on the daily chart. I rarely see them matter on the M5. So,
Well, I'll weigh in on that one because this is an important point. Why do measured moves work? So haven't really talked about it. Somebody asked me if I would do a presentation, so I'll give you kind of a quick synopsis on them. But you get a dip like this, okay? And I'm using SPY specifically because it works for indices. Yes, it works for futures. No, it does not work well for stocks. There might be some isolated instances where it does. Stocks move independently. They've got all sorts of information coming out on profitability, revenues, guidance, regulations. They're all over the place. Okay. So institutions are not running algorithms to find out if Crocs is hitting a measured move. Okay. On the S&P, different story. They are in thick as thieves, buying baskets, selling futures, trading options. They're doing all sorts of stuff on the S&P 500. They have mathematical algorithms for the indices. Yes, it works for the indices, and it works well on a D1 basis for SPY. Absolute agreement with Harry on that. So you get a dip, you take the high here, you take the low here, you measure that move, and you add that move onto the top of this, and that gives you a price target, which happens to coincide right about here. All right. And if you did the same thing all the way along, if you took this and subtracted this and added it up to here, guess where you would be? Right about in here. I've written articles on it. It's a very simple, easy method to use. It works really well on the upside, doesn't work quite as well on the downside because there are all sorts of factors that will cause a market drop like this. And market drops tend to be more unpredictable. Rallies tend to be more predictable because this is like panic. And there also could be some institutions that are out of position. There could be increasing margin calls that force people out of position so it doesn't behave as orderly as a market rally does. So I like using them on the upside. I like using them for SPY. I like using them on a daily basis, D1 chart.
Aaron, in older wiki posts, you mentioned the EMA 38 cross, but lately, if I'm not mistaken, you've been seeing it as shit. I guess it's still a decent tool for newbies. So I don't see it as shit. What I've been saying is you're back testing that and saying I'm going to depend my trades on 38 cross symbol signals is a shit idea. The 38 cross, for beginners, it's just basically you have to think about. You remember in math class, and there was a difference between when you're studying for your test, memorizing the equations and understanding the equations. The people that understood the equations were able to do obviously much better than the ones who just memorized it. And then you get to the final, and the ones that understood it didn't have to go all the way back and rememorize all that shit because they understood the concept behind it. What is the concept behind the 3-8 cross? It is just telling you what your eyes can see. Look at EIX. Everyone's been asking EIX short, EIX short. Look at the M5 EIX. Do I need a 3-8 cross to tell me that the price right now is lower than it was 40 minutes ago? No, I'm looking at consecutive red M5 candles dropping on this thing. And I can see the size of those candles. So I can see in the last 15 minutes, the drop might have been more precipitous than in the last 40 minutes. Okay, there's your 3-8 cross, right? You don't need a 3-8 cross if you know how to look at the chart. But if you're a beginner and you want just like, hey, is the more recent trend on an M5 more continuing down on a bearish or a bullish trend than it has in the last 15 minutes than it has in the last 40 minutes? Yeah, you can look at 3-8 cross, right? Understand what it's telling you, though. It's just basically looking at the average price of and it's an EM, not SM, a weighted average price of the last 3 bars for 15 minutes and the last 8 bars, 40 minutes. And is the last 15 minutes have a stronger trend than the last 40 minutes? That's what it's telling you. So you got to use that information to see, does it say VWAP doesn't matter or relative strength doesn't matter or the market? No, it's just helping summarize the chart for you. That's all it's doing.
So you can see we had this nice sell-off here, and I had mentioned this earlier, and I'd mentioned to you that I would not be shorting here. I would be taking gains on a short that was initiated up here, adding here. Take your gains. Why? Because we are pre-FOMC minutes. Also, look at the price action. Choppy as hell, okay? All over the board. And I'd mentioned this in the chat room, so I'm gonna put it up so you can all read. Before the opening print today, I predicted this kind of price action. I'm not some kind of freaking genius. I just understand how to read and interpret what's been happening, what's coming up, and what the likely price action is today. We've explained all this. I explained that traders are going to be relatively neutral today. We don't get normally two big back to back down days. This is going to be a day of rest. We've got big news coming out with the jobs report on Friday. So, for those of you that looked at this and said, three stick red candles, I know that's bearish. I'm going to short if we break down below the low of the day. You shorted here, and then you got your ass handed to you, and you wondered what went wrong. And here are my comments. You can read, this is the paragraph right in here on what I thought was going to happen today. It's all about context. And you got to learn this if you want to get one step ahead of the game. If you want to be anticipatory, you have got to understand how to put these puzzle pieces together. And it's not easy. It took me years to do this, but that's how you understand what price action is going to be unfolding and how to approach it. And today I'm like, you're going to have some pretty decent moves within a trading range. All right. So it's hit and run mode. You see the market come down, you see it find support in here, you got to be a buyer. Okay. For any longs that you have. But as soon as that market move stalls, you got to get out. If you even trade it, you could just be on the sidelines, and that would be a really smart move today, too.
I'm going to run through a couple of these here. SMJ, is it a good short? Yes, it's a great short. I generally don't like stocks that have less than 1 million volume on a day, but you can't ignore how good this M5 chart is. You get this low here on 11:15, then it gaps up, I believe, on earnings on 11:26, goes well above, goes not well above, but it goes above the SMAs. And then you get this steady drift down, and then today it breaks down below horizontal support. So yeah, SMJ, decent short. One we get asked a lot here is ON on semiconductors. That also is a very good short. It broke below the low of 429, I believe that is that 422, 59.34. Broke below all of its SMAs, broke below its consolidation. ON also a good short. CPB Campbell's again, good short. These are three great examples by Prinav Valam. Thank you very much. All three of those to me look like good shorts. And MBLY, the last one there. That's the only one that to me I'd wait on there. Now we're talking about confirmation. Just broke through the 100 SMA, so 50 SMA. So wait to see if it closes below it and then opens below that low today on Friday. But the first three, SMJ, ON, and CPB, all excellent short choices.
Yep, and there's your red candle engulfing off of a relative high back through the 200-day moving average. Where have I seen that one before? What was the first one? Is that Smuckers? S like Sam, Mary, J?
That would be Sam, Jack, Mary, SJM. Sorry, SJM.
Oh, SJM. Okay. Kept trying to bring that one up. Yep. Hey, with a name like Smuckers. Yeah, that's a choppy stock with a nice breakdown. Obviously, you're seeing a theme in here. Pepsi, Kraft, Smuckers, Campbell's. These are consumer defensive stocks. That whole sector is obviously coming under fire. I could bring up a bunch of others. They're probably, Coca-Cola, probably weak as well. Yeah, you can see how that's been drifting lower. So yeah, you're getting some rotation out of that sector.
Absolutely. You have any other questions on your end there?
I had eBay. What do we think of eBay? I believe here. Let's take a look at what eBay is doing. eBay, that's a nice little pop up, chunky, choppy stock. What has it done recently on a breakout? And it doesn't have what I call escape velocity on this breakout, meaning I would like to see that long wick right there. That tells me that sellers came in and whacked that thing down. I would rather that it didn't even do that, that this is just an extension of this long green candle continuing to move higher. And there's your knockdown right there. I'd want to see to make sure that eBay doesn't just head fake through here. There's got to be some news on it. And I think eBay also is the kind of stock that'll make these breakouts and then fall back. Uh, so you'd have to really check on it. It's relatively choppy stock. Wouldn't be with a bearish outlook for me personally and a breakout like this, I would tread cautiously on longs and I would want to see continuation on it. That would be my answer.
Yeah, there's definitely news here. I'm just looking to see what it might have been, but I'm sure it announced that listings will appear on Facebook Marketplace. There you go. So that's the news on the stock, that eBay will now be on Facebook Marketplace. So, you know, obviously that opens things up for them. It's a decent announcement. Uh, but yeah, I mean, it's relatively strong today. It popped up. You know, if you have a bunch of shorts but you're worried, here's where you look at something like, you have a bunch of shorts on but you're worried because you see this bounce off that election gap. You see we got a strong $3 bounce here in SPY, right? You want to do a hedge, but you don't want to do a hedge that doesn't make sense. Well, maybe an eBay long might make sense as a hedge against some of the shorts. You know, maybe you might want to close some of the shorts right now, but still, those are you have some options there, no pun intended, to work with when it's always good to look at stocks like eBay at this time.
Yeah, someone asked on Verizon, what do I think here? I would not short this stock here. This is on a major horizontal support level, and you can see how it's bounced off of the low. Very choppy stock in a long-term horizontal range. You can see the entire chart here is basically a year old. Stock hasn't gone anywhere, and it's got lots of bounces off of the support level. So there are many better shorts out there that we've highlighted than this stock. So would not be a favorite. I trade prices, no trades here, just a bunch of white-haired guys showing charts that everyone else can see on their own. Cool. Get the hell out of here. You're not learning, you know it all yourself. See ya.
White, your hair's not white here. What? Who's saying that?
I got plenty of it, so I'll share some.
There you go. Okay.
This is all free information. Go wherever the hell you want. I don't care. I can tell you that a lot of people have learned from me and Harry. And if you've looked at our trades over the course of the last 2 years, mine over the course of the last 15 years, I've been producing these videos. It's an excellent track record I'm proud of. And I'm not doing it because I get paid from YouTube. My monthly YouTube revenue, so all of you people know, is about $200 a month. Okay. That's all I get from YouTube. Yeah, but you're selling a product. I got software. Buy it if you want. Don't buy it if you don't want. I don't give a rat's ass. Okay. I want you to learn how to trade. That's it. And I'm not getting rich off my YouTube videos. So go pound sand.
Apple Junkie, I already responded on NVIDIA, and it's doing exactly what I said it might, which is you got to wait to see if it's going to hold that 50 SMA, and it bounced back above the 50 SMA just now. So I would wait and see where it closes today before you decide, and then look on Friday to see where it opens, obviously. But what the hell? We're just showing the same charts everyone else is.
GME strength, can we comment on that? Let's see. Well, first of all, GME as a company is not super viable, but hey, a little grind higher here. I wouldn't touch it one way or the other. Too newsy. Look at all these candles and wicks and overlap. Man, just no. I wouldn't be buying GME. I wouldn't be shorting it either. Just not a stock I even care to trade.
Yeah, I don't like a stock when someone named Roaring Kitty could just post a single meme and all of a sudden the thing's going to ignore every single possible technical. So thankfully, there are thousands of other stocks out there that we can look at that don't carry that type of risk.
All right. Well, if we didn't get to your topic today, Happy New Year, everybody.
Yep.
One thing I will say about starting the new year is I feel very strongly about starting off on a really good note. You do not want to trade out of the hole and build on small successes, but be super patient with the trades that you take this year. I see a lot of market volatility ahead. I'm favoring the short side in here. We got a big unemployment report coming out Friday morning. That's going to probably set the tone one way or the other. We're going to get a breakout or a breakdown. I'm suspecting we come through that 100-day moving average, just not because I think the jobs number is going to be necessarily weak, because a lot of people don't file for unemployment claims into the holidays and the offices are closed. Lots of seasonal adjustments in it. So it's not even so much a play on the jobs report, but there are some nasty fundamental things going on in the background right now. And I believe that is why we're getting this selling pressure. Harry had mentioned the CDS issues. I'm looking at TLT. When you have a dovish Fed, why are interest rates skyrocketing? Doesn't make sense. Okay, so when things don't make sense, tread cautiously. And then now you've got a lid on the market right here. I think regardless of how the jobs report comes out, we're going to see some selling pressure on Friday. I'm positioned for it, so we'll see.
All right. Happy trading, everyone. Happy New Year. We will see you next Wednesday.
Happy New Year. We will see you Wednesday. Let's see how the jobs report comes out. Trade well.